The best way to describe Banxa, we're like the PayPal of the crypto industry. We are creating what is called the fiat on-ramps and the fiat off-ramps. And what I mean by that is we are connecting the US, Euro, Canadian dollar world with the digital asset world. And we help facilitate the transfer of US dollars and Euro into Bitcoin, Ethereum, and other coins, as well as vice versa.
My next guest is Domenic Carosa. He's the chairman and founder of Banxa Holdings Inc., trades on the TSX Venture under the symbol BNXA, and in the United States under the symbol BNXAF. Domenic, welcome.
G'day, James. Thanks for having me.
You bet. It's a pleasure. Domenic, let's start with an overview. What is the business of Banxa Holdings?
The best way to describe Banxa, we're like the PayPal of the crypto industry. We are creating what is called the fiat on-ramps and the fiat off-ramps. And what I mean by that is we are connecting the US, Euro, Canadian dollar world with the digital asset world. And we help facilitate the transfer of US dollars and Euro into Bitcoin, Ethereum, and other coins, as well as vice versa.
Yeah, that sounds like something that's really quite needed at this point. I understand that the biggest source of investment losses due to fraud in Canada now are associated with cryptocurrencies. And so that makes me think that this is the most needed sort of platform. And what is the status of this relative to the banking rules in terms of international transmission of funds? Are you advanced yet where you can do large scale transactions, or is this still developmental?
The company has been operating since 2014. In the December half, we generated around $800 million of transaction value, which represented about $40 million of revenue. So we're currently on a run rate of $80 million a year. So the business is very well developed. And what we do, and you sort of brought up an issue around regulation and compliance. And if I sort of take a step back and look at what does Banxa actually do at its core, there are two core things. One is that we process payments, not only credit card payments. We work closely with MasterCard, Visa, and Apple Pay, but the real focus has also been on local payment methods like ACH in the US, Interact in Canada, SEPA in Europe, and the list goes on. And underlying that is our RegTech platform. We hold multiple licenses around the world that allow us to operate and trade. They're sometimes called VASP, Virtual Asset Service Provider licenses. In the US, they're the equivalent of MTLs, money transmitter licenses. And that's the reason why our partners, exchanges, wallets, and increasingly Web3 platforms, DeFi platforms and NFT platforms are choosing Banxa, is because we can handle the payments, but we also handle all the regulation and compliance. And just to give you context, about a quarter of the people in our company, we've got 220 people, so a quarter of people are in regulation and compliance, because we know that the industry is becoming much more regulated, which really plays to the strengths of Banxa.
Let's just jump straight to the utility of this at this point. I have to admit that I've not waded into the crypto universe yet, just because it scares me a little bit. But and the interesting fact to me is that for example, if I wanted to buy a house in Malibu and I could do a transaction using cryptocurrency, but ultimately I'm going from fiat to crypto and crypto back to fiat, or is the marketplace and the banking facilities now sufficiently advanced that I can actually do a direct transaction in Bitcoin for a home in Malibu across the international border from Canada?
You can basically do effectively a peer-to-peer type transaction. And maybe just to take a step back and just paint the picture around the industry. We've been around since 2014. What you consider are the early adopters in the ecosystem, and I'll put up my hand and say I'm one of those tech nerds, and it's really been the domain of the tech nerds and the finance nerds. what we're now starting to see is that this industry is now maturing, and it's becoming much more mass market. There are now verticals outside of people just buying crypto to be able to trade a Bitcoin Ethereum pair. They're now basically buying Bitcoin or Ethereum or Solana or Polkadot or any other coin because they want to enter the metaverse. They want to be able to buy an NFT, a non-fungible token, or participate in online gaming, blockchain-based online gaming. And that's really the core essence of our company. And if you look at what we do, we take fiat money and we convert it into a token. Bitcoin, Ethereum, NFT, all of that are basically tokens. And so our technology platform allows the transfer of fiat to token or crypto, and crypto back to fiat. And we're very much like an infrastructure company. And some of the ways to describe us is we're like a toll road operator. When you drive onto the toll road, we clip the ticket. When you drive off the toll road, we also clip the ticket. So we're really part of that infrastructure of the industry. And then particularly now as it's moving from the early adopter market to the mass market, I think there's significant opportunities out in the marketplace. And you've seen that with our numbers. September quarter versus December quarter was up over 100%. Our annualized revenues are around $80 million. And I guess from an investor's perspective, investors, and you're right, some investors are actually quite afraid of crypto, don't really understand it. And I totally understand, because as soon as you start talking about private keys and all of that, we lose a lot of people. And really, in my view, Banxa is a good way for investors to get access to the cryptocurrency and digital asset market without actually owning the underlying Bitcoin or Ethereum coins.
This is intriguing. I mean, I have downloaded wallets several times and sort of put myself in a position to do transactions, but the whole process is so arcane that I fail to proceed, because it's it starts with this series of words that constitute my secret key, and it's like, well, I could remember 12 words that are unrelated in a row over time. I mean, I'm one of those goofballs who remembers his credit card numbers, but it's not something I would trust going into my middle age. It's like, well, I'm 58. My grandparents were in homes by the time they were in their late 70s with dementia and Parkinson's and Alzheimer's, and I thought, how do you protect that fortune? The second side of it is, though, more importantly, that the attraction, the justification, the rationale for cryptocurrencies was all about privacy and the ability to conduct transactions without the interference of government. Yet you're telling me, by the very fact that 25% of your staff are compliance focused, that AML and KYC are obviously part of your ability to exist. So how do you reconcile these things in terms of the broader representation of the value proposition of crypto relative to the actual utility of it in transactions?
First and foremost, people think that crypto is anonymous. In fact, it's actually far from that. If I know your wallet address, I can track every single transaction. It's actually the most open and transparent system out there. It's more transparent than the current financial system. That's one of the, I guess, fallacies in the industry that people are now starting to be made aware of. Your point around downloading a wallet and understanding those keys, that's the difference. And I'm not going to get too techie around a non-custodial wallet versus a custodial wallet. And what I'd say is download something like an Edge wallet, which basically takes all your keys and converts that into your username and your password. So you don't have to go and remember all of those 12, 24-digit keywords. But that's just part of the industry growing up and becoming much more what I call user-friendly and targeted at the mass market, mass consumer market, as opposed to really being you kind of needed a PhD in computer science to be able to understand how to actually use crypto. And that's why ultimately, and the feedback we've had from investors is, we don't really understand Bitcoin and crypto, but what we do know is this industry is growing. The whole notion of blockchain and NFTs and metaverse, the ecosystem is growing. We only heard, Goldman Sachs conducted their first crypto OTC transaction this week. It's like 8 years, 10 years after the whole ecosystem was born. BlackRock has just started dipping their toe in the water. So we're now starting to see major institutions and family offices and high net worths get involved in the space. And because it is still, to a degree, very techy and very nerdy, companies like Banxa are giving investors exposure because, they can all go online and click a few buttons and buy Banxa's equity on the TSX, the OTCQX, and very shortly, I should have also mentioned, we're in the process of uplisting to NASDAQ.
How do you reconcile the volatility of, say, Bitcoin? If I'm going to buy a multi-million-dollar house in Malibu and, Bitcoin has intraday volatility of, 1 to 2 to sometimes 4% within a given day. So how do you, I just don't understand how you could possibly, when do you pull the trigger on the transfer to avoid losing money on that volatility?
There's obviously Bitcoin and Ethereum, and they all have their purpose. And if you kind of, once again, my view around it, I think Bitcoin is like digital gold. Ethereum is really the smart contract layer on the blockchain. And if you wanted to conduct a transaction similar to what you've said, I'd actually recommend using something called a stable coin, which is basically USDC, USDT. There are multiple stable coins out there that are basically pegged one-to-one to the US dollar, or there's ones pegged to the euro. And that way there's no volatility other than the volatility in the actual US dollar or the euro. So once again, it comes back down to, and us at Banxa, whether it's Bitcoin, Ethereum, Solana, or stablecoin, comes back to the whole philosophy around the business. We take fiat money, which is where the majority of people in the world exist, and we help them very easily convert and get access and get involved in the digital asset world with a few clicks of the button. Obviously, we go through a full AML KYC process like a bank or a broking firm will do, because we are licensed and we are regulated in many parts of the world. And so just sort of completing that loop, if you were going to buy a house in Malibu, my view would be, use something like a stable coin, and that way you can send the coin directly to the customer. The fees would be minuscule. We're talking, cents to basically conduct that transaction, and they will get that money literally within 60 seconds. Imagine trying to do a $1 million transaction through the banking system. You sometimes be waiting for days, and particularly if it's from Canada to Europe or Canada to Australia or vice versa, you could be waiting 3 to 5 days for that particular transaction to occur.
This is the question that I think is preventing wide-scale adoption of Bitcoin even. It seems to me that Banxa solves the problem of transaction fiat to crypto and back again. That's refreshing to me. But the big question mark is, to what extent does the discourse from central banks, who are suggesting that central bank digital currencies are going to be issued and operated by the traditional central banking system, to what extent is that a threat existentially to Bitcoin?
Fiat money like the US dollar and euro basically already exist in digital form. It's basically zeros and ones, whether it's at the Federal Reserve or at your local bank. It's already digital. The notion of a central bank digital currency doesn't really change how fiat money gets used. The best way to really describe Bitcoin and Ethereum, and I certainly encourage viewers out there to look at Michael Saylor from MicroStrategy, and I really like the way that he describes Bitcoin and Ethereum. And the reason he's bought and his balance sheet contains thousands and billions of dollars worth of Bitcoin and other coins is because, in his view, and in fact in my view as well, The best way to look at that is Bitcoin is like a software company. Ethereum is like a software company. The best way for investors to look at it, it's like you're investing into Microsoft, Oracle, or one of those companies. That's ultimately what the blockchain and the coin does. And I don't get too involved in the volatility. And the reason I actually got involved in the space in 2013, I read the white paper, the whole concept of a peer-to-peer network, a trustless network. Like from a technology perspective, it was like absolutely wow. And then thinking about the commercial applications, it's mind-boggling of the different applications that can be written. So I kind of look at it purely as people, if they're buying Bitcoin or they're buying Ethereum or Solana or one of the other coins, ultimately what they're doing is investing in that as a software company. It's a decentralized software company. It's not centralized like a Microsoft or an Oracle, but that's kind of the best analogy that I could give investors out there.
Okay, Domenic, that is fascinating stuff. I am super intrigued. I'm going to do a lot more research on your company, and I can't wait to have you back because this is super intriguing to me, and you give me some of the best answers I've heard from anybody in the industry yet. So I appreciate your time, and we'll have you back soon.
Fantastic. Thanks for having me, James.
You bet. Bye for now.